Okay, this is how I made $1,398 day trading NASDAQ yesterday on the 18th. I'm recording this trade recap a day later on the 19th. But if we look at price action yesterday, coming into the open, I've got us stopped here at the 6 a.m. candle. This is the 4 hour. We can see that we're kind of slightly chopping, especially on ES. NQ, we're slightly making legs down on the 4 hour, but still not the greatest. We're just kind of chopping a little bit, as I mentioned. And coming into the day, what we have on the 4 hour is we come up 6 o'clock. What we do is we put in a SMT. ES makes this new high, pokes above this 4 hour high. NQ is below it, this yellow level here. If I drop down here to the hourly, we can also see what we have here. So this is 9 o'clock candle. Back over here, I got the 9 o'clock candle. What we have is this massive illiquid price range here on both indexes, NQ and ES. ES has already poked into it and retraced out of it, and Q's yet to poke up into it. And initially coming into the day, my mind was open to a trade, or open to what price action was going to show us. Initially, when I saw this SMT, I thought, and especially with London session being taken out, what we have is relatively equal lows here on ES with this hourly and on NQ. So with NQ not making a new high, I would have liked to see NQ favor shorts, come down, take out this low, take out this hourly low, maybe even this hourly low here, but kind of move away from this low here because this is high resistance. So you can see that we come down on the 4 hour, sweep at this level here, sweep, get a push, reversal, get a push up. So off this SMT, what we would like to see coming into open today is either a manipulation up to take out London high to then dump us down and take out these levels here, or come down, take out these levels here immediately at open, which would then be the retrace to continue this move up, take out this high, or ideally take the trade on ES up into this zone. And once we get up into this zone, this illiquid price range, I thought that we could move swiftly through it, deep up into this price range, test, this low level here, this low level here, and then potentially even the bottom of this leg up that swept before we got a dump, right? Because this is our leg up that sweeps out this liquidity here before we ended up dumping and starting this illiquid price range. So price could come up, test the bottom of this gap before rotating or whatnot. So if I drop down here to the 15-minute, we can see how price plays out. This is 9:30. This is 9:30. So, like I said, what we have actually is right before open, ES comes down, takes out this 15-minute low. But like we talked about, ideally we would like to see NQ be leading shorts here because it favors the S&T short, where ES is up here and Q is down below this level. So we'd like to see NQ leading shorts. But nonetheless, what we do is we have to see what price does. First 15 minutes open. First 15 minutes open, what we get is this 945 candle. What ends up happening is we come down, we sweep, and what does this look like? Like I said on the hourly, we get a push up, making this SMT. What do we have to do to complete this SMT? If I go back to the hourly, we have to sweep out the low on the leg that formed the SMT. So this is the move up that put in the high. We come down, we take out this low here, which could be considered completing the SMT. Now, could you consider it fully complete? I would think so, but some would argue that it would have to come down and take out this low. But I would think that it coming down, sweeping out this hourly low would be enough to consider this SMT worked and completed. But 9:45, what we get immediately, once we get this sweep of low, you see how deep NQ gets down into this level? ES gets slightly, they're about the same. Actually, they're about the same. They both come down into this equilibrium of this session range, this big hourly move up. You can see down in equilibrium, once we get a strong reaction up out, and ES inverses this 15-minute gap. I was looking for some sort of lower time frame SMT to be able to long ES up to London session high and into this super illiquid range as we mentioned here. Since ES inverses 15-minute gap. But since NQ did not, we very well could put in an SMT from here up to here, where if ES comes up and takes this, and NQ down here, which would then allow NQ to run lower, take out this hourly level, and whatnot. So if we drop down to the 5-minute, let's see what we got. Let me go over here. Okay. So let's see what the 5-minute looks like. To me, this lined up well for longs because even though we didn't inverse that gap on the 15-minute on NQ, what we did do is break 5-minute structure to the upside on both indexes. Break above this high, break above this high. Get a 5-minute break of structure. And ES ends up inversing this 15-minute gap, which is this yellow square. It's showing here on the 5-minute chart, but it's a little hard to see. And what we have are a bunch of 5-minute inverse gaps here. But that we very well could have respected, but since we already broke structure to the upside on the 5-minute on ES and NQ, it could have been, anticipated that we would not reject, but test and respect some of these gaps here. But since we broke 5-minute structure to the upside on both indexes and inverse the 15-minute and getting such a strong reaction out of this retrace and sweep of liquidity, this move to the upside, paired with the fact that we had this good draws on liquidity to the upside, super illiquid price range was over here on the left side of the chart. I thought that this trade had room to run for bulls. But if we look further, like I said, we inverse this 5-minute gap, then we retrace. This is an ideal trade. Well, not super ideal because we don't have SMT. We don't necessarily have SMT on the higher time frame favoring the longs. We're just getting into a continuation move to the upside, right? We don't have any high time frame sweep, or not sweep, but high time frame SMT. But if NQ, let's say, was to come down, take out this low, and ES remain above it, this would be an A+ setup. But we don't have this high time frame SMT. What we have is, what we're essentially playing here is this high time frame move up. We put in a little SMT on the hourly, get a retrace, sweep out this liquidity to move higher. So we're getting in a continuation trade to the upside. That is really what I thought that this was going to pan out to be, and it did. And what we have is we get a 5-minute break of structure, we get a retrace on the 1-minute. That's what we like. So if we could enter somewhere down here on the 5-minute as opposed to way up here into premium to target London session high, that is ideal risk to reward. And what we have on the 1-minute is SMT from this low down to this low, and this high up to this high, or this low up to this high. Now, is this a super low time frame SMT? Yes, but still one nonetheless. And I would have liked to take this trade on ES, but the SMT is telling me that NQ is stronger. Even though ES inverse this 15-minute gap, intra 1-minute NQ is stronger. So if I go over here, let me get to our 1-minute. Well, we have 5-minute break of structure, retrace. Then once we break 1-minute structure or inverse 1-minute gap to the upside, I'm in long. And what did I do? I entered in here. Where's this low? I targeted London session high. Or no, apologies. this 5-minute level here as first take profit, because we very well could put an SMT here to move lower. First take profit here, second take profit, London session high. If I had more contracts, I would have targeted this hourly level over here. Let me pull it up. This hourly level over here, and I'm going to put more, take profits into this gap. As we see, test the bottom of this, push into this gap. I'm willing to bet it's almost 50%, almost 50% of this gap here. If I had more cons, but I didn't. But so, yeah, like I said, my 1 minute entry was here. Risk this low. Take profits got hit almost instantly, which is good to see. Now, this is not as conventional of a trade as I usually take. But to me, I was just seeing price really good yesterday, or at least I thought so, because on the higher time frame, right, we have to move lower to move higher, and we have to move higher to move lower. And it looked to me like we sweep out this level here on the daily, get a push up, right? Get a push up. And then what do we have to do once we get in this gap? We push up into this gap. We have to retrace slightly. Retrace if we're going to move higher up into this gap and displace it. And that's what we do. Now, and as I said, I was open to shorts. I would have preferred shorts. But since short side liquidity got taken out at market open and became high resistance lows, I mean, this low here was put in, and then we immediately moved away from it. So this became a high resistance low. I began being open to the longs, and that's what I capitalized on. But that was yesterday's trade recap, and thank you.